Talking Options. I like to talk options. Sweet.
Bam, welcome back to Talkin Options. This is question 2 that I always get on commodities. So we already talked about the first one. Is it volatile? And you know those commodities are volatile, or else I wouldn't be giving it to you because we give you a better option. Hello. But the second question that I always get is, how much do I need to start trading commodities? And that's a very good question, because there is a variation depending on the underlying that you're trading. So it's a little bit different from when you're trading just forex. So let's talk about some of the underlyings, and I'm going to show you on the Thinkorswim platform. I'm just going to show you the numbers here so you see what we're talking about to trade a couple contracts. So let's talk about crude oil, for example, because that's one of the major underlyings that everyone runs to when you first start learning futures and futures options. So just taking a look at a day chart, I mean, we see a lot of volatility in the underlying. You could see what it did just from November to the beginning of this year. It was crazy. Went from like 75 all the way down to 45. So right now, zooming over to where we are in September, we have seen a lot of volatility. Of course, we are ending summertime, so prices for crude oil definitely usually goes up during the summer because a lot of people are traveling. There's a lot of supply and demand need for crude oil and natural gas. Right now, we're starting to see a little bit of a downtrend. But let's say, for example, we believe it's going to still continue going up, and we want to do one contract in crude oil. So if we were to do a contract in that and trading options, futures options in particular, let's say we do a long call. Now, a long call at the money right now, doing one contract would cost us $1,200. So basically with a long call, remember, you are paying outright, and that's the max that you'll be able to lose. So the max that you would lose on this crude oil trade if you were trading at the money, doing a long call, is $1,200. Now, if you press the confirm tab, this is where it's going to tell you the buying power effect. So all you have to do is add the cost of the trade to the commission that you're paying, and then you're going to get the max that you'll be able to lose, and also the buying power effect with future options. So you can see with this trade, it would be $12.45. So one contract of crude oil is going to cost you $12.45 if you wanted to do a long position. What about a short position? What if you wanted to say that you were going bearish on crude oil and you wanted to do a short call? We'll switch that over to the sell sector. Still on the call side, you can see that trade would cost you, well, not cost you. Remember, with the short trades, now the cost is actually what you're collecting. So this means that the max I'll be able to make on this trade, you can see it here, the max profit is going to be $1,010. So I'm going to collect that money up front, and that's going to be the max that I can make. You also see on there that it says that your max loss is infinite. So with short options, and very important with short calls, they're considered one of the most risky options contracts that you can, or trades that you can place. And so for that reason, because the max loss is infinite, and crude oil could potentially, I mean, of course it probably won't, but it could hypothetically go all the way down to zero, that buying power is going to be about $4,500. So that's where you start to see a little bit more, you need a little bit more to make a little bit more when you're talking about future options. Micro and mini futures is definitely the way to go if you're watching this video and you're saying, oh, I only got a couple 500, 1,000 to play with. Micro minis. We could start off with that, and I have a mini course that breaks all of it down, so check out that link in my bio. But if you're saying you want to trade future options, you got a little bit more to play with, maybe 15, 25K, you could see that one contract of crude oil, to do a short call with that, you need the buying power effect of about $4,500 to place that trade. Let's look at another one. So crude oil is definitely there. Let's also look at gold, because everyone wants to trade gold, right? So gold futures, if we're looking at the options chain, and I do want to mention I'm recording this on the weekend, so the market isn't open. That's the reason why you're not seeing the price variation. But let's say that we want to look at the chart really quickly, just looking at some of the technicals, not really paying attention to the fundamentals right now. If we wanted to do a bearish trade on this, and let's say we want to do a long put, so that would be on the ask side, on the right hand side of the options chain, at the money at 15.25, drop that down to one contract. So the cost of this trade would be $1,400, meaning that with gold, if we want one contract future options, and if we're looking at an expiration, I think this expiration is in 6 days. So if we're looking at that expiration, doing a long put, this basically is telling us that it's gonna cost us $1,400. Again, long options, that's the max that we can lose. We can make infinite. If I wanted to do a short put, believing that gold is gonna continue going up, which we've seen a bearish trend for like the last 6 months now, let's go over to one contract here. So it says we're gonna collect about $1,200 for this trade. So I'm gonna collect $1,200. The max that I can lose, technically unlimited, but you can see here it's, they have it as 151,000. Basically, the max that you can make is the profit that you collect. And of course you have an unlimited loss potential. But because this is a short put, it's technically not unlimited, but it's gonna be definitely a way bigger amount than what you paid for the trade. In this case, 151,000. The buying power effect is still about the same, 4,500. So when you're trading future options, you definitely will need more money than trading the micro E-mini futures. A couple thousand will definitely get you in the door. Of course, you don't have to start putting your own money in the account. You can start with a simulated account, and I explain all of that in our E-mini course. You know what else I have in that E-mini course that I haven't been talking about? I actually talk about the problem with forex and the whole solution that Talkin Options has been bringing to the table for forex traders. If you are watching this video right now, you heard about forex. Listen, I know there's a lot of people that's been telling you that they've been profitable, but right now I have a tax challenge that's going on and I still have 0 submissions. And that tax challenge is you bringing your forex guru to me and them showing us their broker account, showing us their broker statement that they are actually profitable being a day forex trader. Of course, those are the stipulations. You are saying that you are a day trader, you trade forex, you don't know anything about options, you don't use high frequency trading or algorithmic trading rather, and you are profitable trading forex. You pay all the bills trading the Euro USD. Child, please. I am still waiting for a submission and I still have a 0. So maybe you can bring someone to me. I'll pay you $500 just to see it. Last week it was 1,000. This week it's gonna be 500. Next week, who knows? Maybe it'll be 5,000 depending on my trades with crude oil and gold. So until next time, make sure you Talkin Options. I'll see y'all later.